Dear friends, welcome to weekly view on markets. Markets opened this week with a positive note. Markets were up on Monday to Wednesday, and there was RBI meeting, that is Monetary Policy Committee meeting on Thursday. RBI in the meeting has not raised interest rates, but the commentary from RBI governor was hawkish. RBI governor has stated that the food inflation is persistent, and also they have raised inflation forecast from the earlier figures to the higher levels because of the persistent food inflation and higher oil prices. RBI governor's commentary was more hawkish than the expectation of the market. Because of all this, on Thursday and Friday, we have seen correction in the market. Now let us look at the performance of indices during the week. Nifty closed with 89 point loss at 19,428 for the week, closed with a loss of 0.45%. Bank Nifty led the fall after RBI policy and lost about 1.52%, closed at 44,199. Mid cap and small cap index continued their outperformance in this week also. Mid cap gained about 205 points, with gaining around 0.55%. Small cap index gained 51 points, closed at 11,748. India VIX is at 10.52, gained about 1 point. Now let us look at performance of different sectors. Market was somewhat evenly balanced with the sectors ending in green and also sectors ending in red. PSU banks gained the most during this week. A lot of PSU banks have given very good quarterly results. So, and also, as we had discussed in the earlier weeks, the valuation comfort is there in the PSU bank. That is why we have seen a rally of around 3% for this week. Media sector gained about 7.46%. Information technology gained in this week also about 1.26%. Metal stocks gained about 1%. Consumer durables gained about 1.38%. Oil and gas gained about 1%. Real estate sector and FMCG private banks all lost about 1%. NBFC sector also lost about 1%. Infrastructure sector was marginally negative with 0.13% loss. Now let us look at technical charts because the market is undergoing a kind of small correction and consolidation. The short-term investors have to look at the technical levels. This is a chart of Nifty. I have not changed the trend line drawn in the earlier week. As we can see, Nifty is coming down towards the support level. So Nifty may touch this support level of around 19,400, and from there, if it pulls back, it will be good for the chart structure of Nifty. If Nifty falls below this trend line, the chart will start making lower tops and lower bottoms, and the intermediate trend will turn negative. But most probably, I am very hopeful that Nifty will pull back from the support levels and we'll see Nifty crossing 19,600. So if Nifty crosses 19,600, then it will negate this formation of lower tops and lower bottoms. Again, uptrend will be resumed. So the next week will be a crucial week which will decide the short-term trend of Nifty. This is a chart of Nifty mid-cap index. Even though we see a small fall on Thursday and Friday, the overall chart structure of Nifty mid-cap index is quite good. It is quite healthy, and I feel that there is no need. The outperformance of mid-cap will continue. This is the daily chart of Nifty small cap index. The small cap index is also outperforming the market for past few weeks, and this outperformance is likely to continue. I don't see any weakness in the chart structure, and small cap index is likely to go to the previous high of 12,000. Small cap index, if it crosses the previous high, we will see a fresh bullish move on the Nifty small cap index. This is the daily chart of Bank Nifty index. This is a trend line which I had lost drawn last week. And as we can see now, Bank Nifty index has closed below the support level. So the chart is showing a lot of weakness for the Bank Nifty. And the next support level for Bank Nifty is at around 43,500 to 600 level. If it breaks that level, then the next support level is at 43,300 level. So even though we have seen weakness based on the banking fundamentals, I feel that somewhere at the support level, the bank Nifty will take support and pull back. It will negate the formation of the lower tops and lower bottoms on bank Nifty index. But the short-term investor and traders have to watch for the technical levels accordingly, take their decisions during the intra-week. Now let us look at some of the fundamental factors of the market. RBI dollar reserves is at around 601.5 billion US dollars. It had dropped by about 2 billion dollars for this week. USD INR rate is at 82.8. Dollar index is at 102.73. And gold price for 24 carat 10 grams is at 59,620. It has slightly dropped from 60,000 level. Crude price is one point where I have concern. It is at a higher level, closed at $86.73 per barrel. So in last 2 months, it has moved from around $70 per barrel to $86.73 per barrel. So for Indian economy, this is really a concern as we are mostly importing our oil requirements from other countries. Our import bill will go up. Rising oil price will have a impact on inflation, and also it will have a pressure on the foreign exchange reserves of RBI. So we need to watch the oil prices. FIIs have been continuously selling for last 4 weeks. This week also they have sold 4,700 crore. And DII, even though they have been buying, they have bought much lower at around 2,223 crore. So that is why we see a fall in Nifty. One major reason for Nifty not able to sustain at a higher level is continued FII selling. We need to watch on this data also. And IIP data released by NSO for the month of June, the IIP growth has come at 3.7% compared to previous year of 5.2%. So this is also a slightly negative factor for the markets. But there were heavy rains and flood situation in the country that must have had a little impact on the core sectors and IIP data. We need to watch this data also carefully. RBI holds the interest rate during the bi-monthly MPC meeting. They have not changed the interest rate, but what they have done is they have given a hawkish commentary and stance of withdrawal of accommodation is a hawkish commentary, and RBI has indicated that they will remove liquidity from the market. That is the meaning of withdrawal of accommodation. For that, RBI has raised CRR for banks temporarily to mop up the liquidity. RBI has started collecting back all rupees 2000 notes, and these rupees 2000 notes were getting deposited in banks, and banks were having surplus liquidity because of this, and RBI has raised CRR temporarily to withdraw this surplus liquidity from the market. During the policy meeting, RBI stated that inflation is persistent, and based on the high oil prices and food inflation, the forecast for overall inflation has been raised by RBI. That is negative for the stock markets. If the inflation continues to rise, RBI may further increase the rates. That is the point that market is looking at. That is why we have seen a big correction in banking and financial stocks after RBI meeting. These all factors have negative impact and on banks and financials in the near term. But on a longer term, RBI has retained GDP growth forecast at 6.5% for FY24. The long term view is still positive. Of course, short term hiccups will be there, but the India GDP growth, as forecasted by many rating agencies and RBI, is quite positive. The long term view on Indian economy is positive, and I also hold quite positive view on the markets going to higher levels, maybe with small corrections here and there, but we'll see more than 20,000 levels of Nifty and 68 to 70,000 levels of Sensex before the end of December. So investors have to be patient. Mutual fund investors have to continue their SIPs and remain with their investment, and they will see good returns in coming years. The market is dependent on the corporate earnings and also the economic growth of the country. So as long as these two key factors remain positive, I don't see any big correction coming in Indian markets. Investors should not get afraid of small corrections. They should believe in our country and our economic strength and the growth in our economy, and that will help the investors to make good returns from the market. This is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can give your comments, ask your questions, which I will reply. We will meet again next week. Thank you.